Hey there, and welcome to my channel, The Paper Bag Investor. Today I want to talk about the question, should Canadians buy US stocks in their tax-free savings account? So let's get into it. Before I go any further, I just want to make a quick disclaimer that I am not a financial advisor. None of this is personal financial advice to your personal situation. I'm just a guy with a paper bag on his head who loves investing and thinking about the future. And if you love investing and thinking about the future, I want to encourage you, hit that subscribe button down below and follow along with my journey. Learn with me how to become a better investor. Okay, so our question, should Canadians buy stocks in their, or US stocks in their tax-free savings account? And the short answer, my answer, in my opinion, yes, a most definite yes. My tax-free savings account strategy is I want to basically put as much money as I can in up to my limit and invest in what I believe is going to give me the highest return over a long span of time, over a longer horizon. Because a tax-free savings account, the returns as they snowball and compound, and those returns compound in growth, they still are all tax-free. That's the beautiful thing about a tax-free savings account. So if I can get the most aggressive returns, I'm going to try and do it. And in my opinion, it's worth some of that quote-unquote risk. But if you look at the U.S. stock market, it historically has done better than the Canadian market. I want to compare the two biggest index funds in Canada and the U.S. In the U.S., it's the S&P 500, which is the top 500 countries in the U.S. that are considered market leaders in their fields. And on the Canadian side, we actually have, it's called the S&P TSX, and that compares the top 250 market-leading companies in Canada. And if we look out over the last 41 years since the S&P TSX was first started, we can see sort of the overall return, but that works out to, you do the math, that works out to a compound annual growth rate of 5.35% over those 41 years. So basically every year you'd make 5.35% if you just bought that index fund 41 years ago, and that would compound over time, 5.35% compounded every year for 41 years. If you look at the S&P 500 over the same time period, approximately the last 41 years, it's returned, if you do the math again, it's returned 8.8% compound annual growth rate. So more than about 3.5% higher, and compounded over time. That may 3.5% more may not sound like a huge deal, but when you're talking compound growth over time, that is a massive, massive deal. And then just to look at a shorter perspective, we just look over the last 10 years. And again, we look at the Canadian side first, the S&P TSX. It's only returned 2.65% compound annual growth rate, if you do the math again. And on the U.S. side, the S&P 500 has returned 6.5% compound annual growth rate. So almost 4% higher over the last 10 years. Much, much better. And again, I want to reiterate this, that over time, these little changes make a huge difference. And as a Canadian myself, as much as we love to make fun of our neighbors to the south.
Make fun of the Great White North all you want. It's the best country in the world.
The social experiments. USA! 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 USA!
Okay,
And them vice versa make fun of us.
okay, you know, what does that even prove? Okay, you chant anything, people will join in. Canada! 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 Okay, they won't chant anything.
Really, in my opinion, the USA is the most innovative country on earth and attracts much of the best talent. And as a Canadian, if you're listening to this, maybe you don't agree with all the values that the USA sort of holds dear to their hearts. That maybe I wouldn't agree with them all necessarily. But I do admire them as a country that really, really can innovate and really draw the best leaders and business leaders and engineers and innovators to work at companies and start companies that are there. And also, in my opinion, finding companies that are the most innovative in the world is one of the keys to really high performance portfolios over a span of time. So again, in my opinion, it's a no-brainer. It's a Canadian with a tax-free savings account where you really want to find the highest, best returns possible. I want to invest in U.S. companies that I think are extremely innovative and are going to have huge returns over time as they transform the world as we know it. As a Canadian, when you're buying U.S. Stocks, I also want to touch on currency conversion concerns because you're going from Canadian dollars to U.S. dollars to buy U.S. stocks. And I know for some people that might be a turnoff, but I want to explain my thoughts on this. And I want to acknowledge that, yes, exchanging currency is a pain and can be a pain, and it can bite you and bite your returns if you're converting and then converting back and the U.S. dollar exchange isn't favorable to you. But it could bite you, but it also could benefit you, where you actually increase your Canadian dollar returns and because the exchange benefited you when you were buying U.S. dollars and then selling the U.S. dollars. And if you're thinking of your investments like I am over a long span of time, I'm thinking 5 years, 10 years, I'm thinking I'm buying companies that I really actually want to take an ownership stake in the companies, then really thinking 10 years from now, maybe, or 15 years from now, whatever it is, the way the U.S. dollar, Canadian dollar fluctuates, you should be able to hold on and time that U.S. Canadian dollar conversion at a more optimal time for when you're selling your U.S. dollars back to Canadian eventually. So again, with the currency, yeah, it is a pain. I acknowledge that, but it really could, and it could bite you, but it really also could benefit you. So those are a few of my thoughts. I'd love to hear from you guys. Are you a Canadian investor? If you are you investing through your TFSA into the U.S. market? If so, what companies are you buying? What has been your best performer over time? What are you most excited about? I'd love to hear your thoughts down below in the comments. And again, if you like this video, if you like high growth investing, I would encourage you, hit that subscribe button down below. I've been on an investment journey. I have started with an engineering background, but I've been on an investment journey for about the past 12 years, where I've been able to average over 20% compound annual growth rate over those 12 years. And I want to continue, my mindset is I want to continue to make at least 20% a year, if not more, is my goal. So again, if this stuff interests you and you're excited about this, please hit that subscribe button. And while you're at it, hit that like button. It really helps me out. And follow along with my journey as this channel grows and I continue to learn about investing and share my thoughts with you guys and hear from you as well. Okay, so thanks so much for watching. Signing off is the Paper Bag Investor.